Hey everyone, and thanks for jumping back into the Equityverse. Today, we're going to talk about Tesla, a textbook bubble. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the holiday sale on Into the Cryptoverse Premium at intothecryptoverse.com. One of the most difficult parts of navigating market cycles can just simply be figuring out where within the cycle we likely are. And if you can try to take a step back and look at it from an objective point of view, if you can understand or better understand where we likely are within the market cycle, it can hopefully help your strategy moving forward. So I'm going to try to do my best to help elucidate where I think Tesla is within its market cycle. And of course, you're up to your own accord to figure out how you want to use that information. Now, if you have followed this channel throughout 2022, you know that my general thesis, right, for most of the year has just simply been risk assets are going to be very bearish, okay? And that risk assets like equities and cryptocurrencies are just simply in downtrends for the duration of this year. And hence why I've said many times that cash is king. If we break that statement down a little bit further, and you wonder why cash is king, it's not simply just because we can see that the asset prices are falling, but there's this thing called the risk-free rate, right? And when treasury yields are going higher, investors are less likely to put a lot of their money in risk assets when they can put some of that money in, say, fixed income investments and earn a relatively risk-free yield. For instance, if you were to go look at 2-year treasuries, you'll notice that they're at levels that they haven't been since 2007. And if many of you have not been an investor since before 2007, then there's a good chance you just simply have not lived through an investment period where fixed income investing is this attractive. Getting 4 to 5% in a relatively risk-free way through things like certificates of deposit and whatnot are an attractive option for investors who are worried about the implications of a long-lasting inflationary bear market. We've talked about this on the S&P 500 this year. If we go take a look at that, and let me just pull it up on the S&P 500. One of the things we talked about is how we've just simply been putting in lower highs and lower lows, and how every time we come up to this trend line, it's easy for everyone to want to perform some type of mental gymnastics to talk about how this time it's going to break out and go to new all-time highs. But so far, the status quo remains unchanged. Of course, it eventually will break, but it has not yet broken. And so this inflationary bear market continues. Risk assets continue to remain under pressure. The risk-free rate is between, like 4 to 5% or so. And of course, it's going to make investing in risk assets a little bit more difficult for more risk-averse investors. So then where does Tesla fit into all of this? Okay, this is the question that we must answer. Now, right now, Tesla's at $123, but today it's been between $121 to $128. So it's been within this, fairly tight range today. It is coming down quite quickly though. And so what I want to do is I want to talk about what is the best case scenario for a bottom, in my opinion? What is the worst case scenario? And where's somewhere somewhat in between where I think more and more people will start to find some value, okay? Now, again, I will remind you, the Tesla bulls will be the first to criticize any type of analysis suggesting the price could go lower. But they'll also be the first ones to tell you to buy the dip the next time it goes lower as well, okay? And they've been doing it all year. So you have to remember, it's easy for these people to say buy the dip when they're just speaking to, to some audience online, but it's much harder to buy the dip if you listen to this advice and you've been buying the dip all year. If you've been buying the dip all year at 300 and then at 200 and then at, at 150, etc., it doesn't really work out that well when they just simply keep saying buy the dip. So what I want to do is I want to show you, and I'm sure many of you have seen this before, and I'm not, I'm certainly not under the impression that, this is the first time you've seen this chart, but this is the, the psychology of a market cycle, the Wall Street cheat sheet. Fairly fairly obvious chart. We've been talking about these types of charts for a long time. We've used these charts to better understand crypto as well. But when you look at this chart, what you'll see is sort of like an accumulation phase going into this hope and optimism, belief, thrill, euphoria, followed by complacency, the dead cat bounce, or a couple bear market rallies here, and then anxiety, and then in denial. I think that Tesla is currently in the denial phase. That's where I think Tesla currently is. I do not think we have yet seen full panic, and I don't yet think we have seen full capitulation either. Okay? And the reason, some of the things that you have to consider is that these changes in sentiment take years to really play out, right? So like if you think about this bull market, really started in late 2019, and it didn't stop until the end of 2021. And so we've been in a bear market for about a year now, but this could easily extend a few more months, right? No problem. It could easily extend a few more months. So what I want to mention first is that right now the valuation of Tesla is coming in at around 123 or so. Okay. So we first must recognize that in a denial, panic, anxiety phase, there are bound to be bounces back up to the upside. And every time a bounce happens, the bulls will say, I told you so, right? And they will sort of point fingers at the bears. If you followed some of the videos that I've done this year, especially on some of the live shows where I've talked about Tesla, I've been fairly adamant that this thing is going down, right? And I've been fairly cautious about risk assets in general. But when you're talking about the Federal Reserve really, rolling off the balance sheet, right, reducing the money supply, raising interest rates to levels we haven't really seen in 15 years, you have to assume it's going to have an adverse effect on risk assets in general. But there's no such thing as an asset going down or up monotonically, right? You will see bounces along the way if it's going down, and you will see pullbacks along the way if it's going up. This is only natural, right? I mean, there are plenty of pullbacks by Tesla while it was going up. So you would expect while it's going down, there'll be plenty of bounces back up to the upside. And again, if you were to go look at say, the relative strength index, you can see that we're at fairly oversold levels on the weekly time frame. If you go to the daily time frame, I mean, it's all the way down at like 19 or something. So, I'm not going to say that Tesla can't bounce in the short term. There's a good chance it probably will bounce in the coming weeks to some higher levels and get the bulls all excited again. But what I think is worthwhile to consider is that just because you see a bounce does not mean the correction is over. And I've said this time and time again, we had a bounce back over here in June, and where Tesla went back up to $300 and everyone was getting excited once again. And I was like, it's probably just going to go put in a lower low. Same thing happened over here, right? It bounced at 200 back up to 240. People got excited again, and so on and so forth, right? So the idea that bounces mean the coast is clear is just simply not true. Okay, and it hasn't been true for a long time. One of the things I think is worthwhile to consider is that the pullback on Tesla so far is about 70% pullback. Where does that stand in the context of Meta? Meta pulled back 77%, right? 77% pullback. Netflix pulled back about 77% too. Meta also, from its low in March of 2020, only went up 179%, 180% or so. Netflix, from its March 2020 low, so if we grab the March 2020, so it's actually not even a low on here, it went up about 90%. They still dropped about 77%. Tesla, from its March 2020 low, went up 1,548%. Now, I know what you're probably thinking. You're probably thinking, well, Tesla's not Meta and Tesla's not Netflix. And that's true. And I would say that's a fair assessment. However, the valuation of Tesla exploded 1,500% since March of 2020. And since 2019, it went up about 3,500% or so. Now, I know Tesla has come a long way in their production and all these sorts of things, and I'm not trying to discredit what Tesla has accomplished, but markets are irrational. And, the same reasons that people were bullish over here, they're going to be bullish every step of the way down as well. And it's just simply because they are unable to go from thinking in bull market terms to thinking in bear market terms. And it's hard to make that switch. And for some people, it takes a year. For some people, it takes a couple weeks, a few months. Some people, they still haven't made the switch. And it probably will be until they make the switch that the bottom will not be in. Okay? So sometimes you need that last Tesla bull to capitulate before the bottom is in. Now, I do think Tesla has a bright future 5 years, 10 years from now. I think it'll likely be trending back up in a bull market. In the short term, though, we have to admit to ourselves that it could easily drop 77%, which is what Meta and Netflix did, and they didn't go up nearly as much as Tesla. That would put it below $100 easily, right? Below $100 easily. So the best case scenario for a bottom for Tesla, the best case scenario that I don't really think is that likely, would be below $100. When I don't think it's that likely, I mean there's a good chance it'll go lower, but is below $100. All right. Could be after it might not be tomorrow, right? I mean, it could come down and maybe it bounces back up for a little while and then it comes back down later on, right? Something like that could easily play out. But you have to consider that this is a potential outcome, right? It's a potential outcome where Tesla could in fact see a similar type of capitulation like Netflix saw and like Meta saw, right? These are fairly standard things. However, the other way to look at this too is that Meta has actually gone well below the March 2020 low. Netflix has gone below where it was in March of 2020. For Tesla to go below where it was in March of 2020, it would actually have to go below $22. Now, personally, I am not of the opinion that Tesla will go below $20. It could happen. Anything could happen. I just wouldn't, I wouldn't say, I wouldn't assign a very high probability to that outcome of it going below $20. But I think we'd have to admit that there is a certain possibility that it could in fact occur. If you were to look at the pre-pandemic high, it would put it right around $60. A $60 Tesla, while it might seem absurd and like it can't happen, is a distinct possibility over the coming months, right? So I think you have to consider that Tesla going down to the pre-pandemic levels of around $60 is frankly a good possibility. We've talked about with the S&P 500 that the S&P 500 is eventually likely going to make it to its pre-pandemic levels of 3,400, and this would constitute a soft landing if it's able to hold the line there, although there's a good chance it won't. But if it were to hold the line at 3,400, I would say that's a soft landing. There's always a good chance we go below that, though. So if the S&P can go to its pre-pandemic levels, if Netflix can, if Meta can, if Bitcoin can, and it's getting somewhat close. I mean, it's not there. It's not there yet, right? I mean, it's getting pretty close to its 2019 all-time high of 14K, right? But if a lot of these, and by the way, if you look to see where Bitcoin is from its pre-pandemic levels, it's about what, 61% above it. 61% above Tesla's pre-pandemic level would still put it down at $100 or so. Okay. So, you have to look at these charts and say, you know what, like, even if you're bullish on the fundamentals of Tesla, right, it doesn't change the psychology of a market cycle. It doesn't always matter what the fundamentals are in the short term. It doesn't always matter if production is growing, right? It just simply does not matter. If you have, the CEO selling billions of dollars worth of stock as late as like the last week or so, it's going to instill negative emotions into investors. That's just simply the way it works. And one of the reasons is because, insiders into a company tend to sell it. Usually, if you look at history, they tend to sell it when it's more overvalued than when it's undervalued. If they truly think the company is undervalued, they're likely not going to sell it, right? Like if you were holding something and you really thought it was undervalued, you probably aren't going to go sell that thing. But if you're holding it and you think it's probably going to drop another 50% or something, then you're probably going to be more likely to sell it so that you can either buy back more later or you can secure that funding for a future investment or to potentially buy it back in the future, or maybe you're trying to fund another investment, maybe whatever that is, whatever it could be, right? There's a lot of different reasons why you could come up with to sort of support that idea. But I want to be clear about something. I've spoken about Tesla on this channel, I think since like 2019. And if you go back and watch videos back then, I was actually quite bullish on Tesla. And I do think Tesla will do great things in the future. I really do. I think it will come back swinging when the bull market is back on. And I think we'll look back at this phase and say, all right, good thing that phase is over. Let's just simply go back into slowly going up, right? It's much better for a lot of people than dealing with these, crazy mania bubble phases. But the truth is, right, the reality of the situation right now is that Tesla went up a lot in a really short period of time, based probably a lot on the fact that the money supply went up very quickly in a very short period of time. But now that's rolling over. The Fed's raising interest rates. The S&P is in a bear market. And risk assets in general are going down. The risk-free rate for investing, fixed income investing, is more attractive, and therefore Tesla has taken a huge hit. So my guess is that Tesla's current stage right now is somewhere in the denial stage. So I think it's somewhere in the denial stage. I think you have the bulls thinking like, this can't be right. Like Tesla's so fundamentally better than this. The bears are wrong. There's no way it's going to do this. This is probably what they're thinking, right? And on the first sign of a bounce, which you'll likely see at some point in the coming weeks, at the first sign of a bounce, what they're going to do, and look for this, they're going to say, ha, I told you so, right? I told you so. They'll say, my investments are with great companies. They'll come back, right? They'll come back. But then after that bounce is over, whenever and however high it goes, and we then get into the panic and capitulation mode, that's when you might finally see these bulls, these perma bulls, finally capitulate. And once the final bull capitulates, the new market cycle can begin. And that's basically a textbook bubble. So again, we've been following risk assets all year. I've been quite bearish on the S&P 500 all year, and I've been even more bearish on a lot of individual stocks because the idiosyncratic risk of any individual stock is quite high, especially in a bear market. If you buy the whole market, you mitigate or you alleviate that idiosyncratic risk, and we just have the market risk. So you're bound to get some companies that are like healthcare companies do much better in bear markets than other like tech stocks and whatnot. So buying the S&P as a whole is often better than buying like a tech stock in a recession. But even with that said, like I've been fairly bearish on the S&P 500. And if the S&P is going to continue this move down to a new low, then it's hard to imagine that Tesla won't eventually see further lows as well. So hopefully this video is useful. I hope I was able to provide some insight into the current Tesla price action coming from someone who's not a perma bull or a perma bear. If you want to call me a perma bear, go back and watch my videos from 2019, 2020 on Tesla. I was quite bullish. I was open about my position on having a position. Now, for all of 2022, I've been quite bearish about risk assets in general, including Tesla. But, I think at some point in 2023, a lot of these risk assets are hopefully going to find some type of generational bottom, at which point we can begin a fresh market cycle. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.